Hello, everybody. Welcome to this week's market update. I'm David Jones here at Capital.com in London. If you haven't watched this before, what we'll do is we'll have a quick catch up with what's going on with the major markets. So stock market indices, gold, oil, natural gas, a little bit of a mix of everything. And if there's anything that you want looking at, if you use the YouTube chat at your end of this session, and we can type it in as I'm going through, and I'll take a look at anything you want looking at. Before we get into the markets and see what's happening, let's just do our risk warning. Spread bets offered in the UK only, and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 85.24% of retail investor accounts lose money when trading spread bets and CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. All information that is provided during this seminar is for educational purposes only. The presenter is not a financial or investment advisor and is not authorized to provide recommendations on any instrument of any kind as part of this presentation. The strategies showcased are applied on hypothetical scenarios. Any instruments that are mentioned throughout are cited only for illustrative and educational purposes. The webinar is not intended to be a personal recommendation or an offer to buy or sell any financial product or instrument and must not be construed as advice from the presenter. Capital.com does not represent that the material provided here is accurate, current or complete, and therefore should not be relied upon as such. Any information that may be provided relating to past performance is not a reliable indicator of future results or performance. To the extent permitted by law, in no event shall Capital.com or any affiliate or employee have any liability for any loss arising from the use of the information provided. Any person acting on the information does so entirely at their own risk. Okay, that's it. That's the risk warning and the disclaimer done. Let's flip over to the trading platform. I think we'll start with US stock markets. Let's flip this over to a daily chart. This is the S&P. So this is some levels that I've been looking at over the last couple of weeks. Just to go through. Obviously, we know if you follow US stock markets, we know how it's been the last few weeks. It's been crazy. But this big candle here, 9th of April, this was the day that tariffs were paused. So we had a massive bounce back in stock markets. But until the end of last week, the market, the S&P and the NASDAQ as well, we'll take a look at that in a second, could not make any progress through these highs on this tariff pause day. Let's flip this over to an hourly chart. Here we go. So those are the tariff pause highs from the 9th of April. So what's that? It's nearly 3 weeks ago now. And the market was sort of stuck in this sideways range. And then over the last couple of days, we have seen the S&P, and we'll have a look at the NASDAQ in a sec, manage to push through these old highs. And that's a positive. It's been a gradual one. It's been a bit of not the most volatile of weeks, but we've had plenty of volatility in recent weeks to make up for that. But the fact that we're seeing US markets push through is positive so far. What day is it today? It's Wednesday. On Friday of this week, we've got the non-farm payrolls, so the US unemployment numbers. So that will be interesting to see what the market reaction is to that. So perhaps we'll see a bit of a quiet time until those come out of the way, but let's see where we are on Friday. But overall, a broadly sideways few weeks, but the fact that the market has started pushing out through these old highs is a positive sign. So one idea, looking at US indices, if we were looking at this from a short-term point of view, over the last couple of days, buying the dip has been an okay strategy. We've only seen relatively small dips, not a lot of volatility day to day. What was the low yesterday? It was down here somewhere in the S&P, around about 5,500. It traded up to 5,570 overnight. We've sold off again. Let's see what happens. So for me, looking at the breakout, we take that as a positive. The fact it's broken out to these old highs. We are seeing it sort of grinding its way higher day by day, just about. So for me, I'd still be leaning to be a buyer of a dip. Let's see what happens the next couple of days or so. But that would be my strategy from in the short term, at least. If we have a look at the Nasdaq, we'll see a similar thing. There we go. So the high for the Nasdaq, that tariff high level, came in at 19,234. The market is a couple of hundred points above that at the moment, so we have pushed through. And again, same as the S&P, we've seen a breakthrough. It hasn't been the most dramatic of breaks. Let's put that on the chart. There we go. Those are those tariff highs. So it's not been the most dramatic of breaks, but the market has been trying to crawl its way higher. Of course, the flip side here, because there's always two sides to every market. The flip side is, well, if you thought, okay, we've taken out those tariff pause highs, if you thought, well, actually, this is a false break, the markets are going to dump again into May, then going short up here with stops somewhere above the recent highs, again, is a very sensible approach. If you were thinking about being short, if you look on the 5-minute charts, and you can see, if we go back to, what's the date today, the 30th, we go back to the beginning of this week, you can see how gradual the market has been this week. This is the Nasdaq. So we did see a fresh recovery high yesterday, sells off a bit overnight, and it's trading around about 150 points lower than yesterday's in session high. So we the trend for the week has been up. It's just been a gradual trend. But for me, the break is a positive one. So I'd still be inclined on the Nasdaq as well to be a buyer of a dip. And if we did see markets, sell off, I'd be looking at these lows from the 25th of April. So this is the Nasdaq, around about 19,100. I think if it takes out those lows, then perhaps the risk is for a deeper sell-off. But for now, we've broken out. I'd see that as a positive. Let's see what the next few days brings. I think the DAX has been a lot clearer. This is, for me anyway, I've traded this quite a bit over the last couple of weeks. So the DAX, if we go back to Tuesday of last week, so the German index did break out through that tariff pause day on the 22nd of April. So that was a week yesterday. And again, we have seen this market push higher. So on the 22nd of April, where did it close? 21,728. And we're now just below 22,600. So the market's gained about 900 points, the DAX, so about 4%, something like that, over the last 8 days or so. And I bought the DAX again today. I bought it on Monday of this week, just because, just going with that, again, that gradual trend. Let's get rid of the indicator for now. So going back to earlier this week, so it would have been the 28th, I bought in around here somewhere. The market sold off a bit more, and we have moved gradually higher. So on the DAX, I think we've arguably got a clearer trend than we have in US markets at the moment. But again, since the break, we've seen this market continue to push higher. So for me, looking at a market like this as a trend follower, what I want to do is be a buyer of any short-term weakness in the DAX. I suppose the big level, what's the low for the week on the DAX? I think is it in here, isn't it? 28th of April, later on during the day, 22,230. So about 350 points lower than where it's trading now. So for me, as long as that level stays intact, then the trend for me is still up. So I'm happy to stay long and be a buyer of the dip on the DAX. So that's been an interesting market. Let's see if I can bring up. Let's have a look at the Spain 35. This is I was thinking about trading this yesterday. Let me show you this. This has been a really interesting market. It's not one I look at very often, but I'd looked at it in recent months because it had been so strong. And then particularly from 2025. So the Spanish 35 ended last year at 11,600, and it pushed as high as 13,500. So we've seen like a 2,000 point, what's that, an 18% move by the Spanish index into March before it fell off a cliff. What I thought was interesting coming into this week was whether we were going to see the old all-time high taken out in the Spanish index, and it hasn't just yet. So the old all-time high from the 25th of March was just above 13,500. Yesterday, got to 13,480. So it came within 20, 30 points of that all-time high. But I think that's a really interesting market. Not one I've looked at much in the past, but some great trends over time, and interesting to see it. It sold off a lot this morning. I wonder, will we see the bounce back up to those all-time highs and take those all-time highs out? So I think if that's another European market in addition to the DAX that I think is an interesting one at the moment. So yeah, I've got trades on in the DAX because that trend is continuing. But the Spanish index, I think, because we came so close to the old all-time high, if the market positivity continues, I'm looking to see if that old all-time high gets tested. Let's see. And then FTSE, the final one on European stock indices. The FTSE, I mean, again, it's been a half decent bounce back here. The FTSE, as is often the case, sort of marches to its own drum because it's got a very different mix-up or composition of stocks compared to the US indices and some of the other European indices. So the FTSE has been a bit of a boring week over the last week, but started pushing higher again yesterday. The FTSE all-time high, again from March, before all the craziness started in the market, is up around 8,900 up there. So we're about, 400 or so points off of that one at the moment. So interesting to see what happens with that. So for me on the FTSE, again, I'd be a buyer, I think. If I was trying to buy now, I would probably, what's the low for the week? I think that's a reasonably good marker to use, considering we're only a couple of days in. The low for the week is around 8,400, 83.90, 8,400. So if I was a buyer, I'd be thinking about having stops below there. I think a more conservative stop would be below the 24th of April lows, down around 83.60. So all positive for European indices. Let's see how long it lasts. But for now, you can't deny the strength, particularly in the likes of the DAX. So let's see how it goes on there. Let's talk about gold. Right, let's have a look at that. Now that has, I think this is in addition to some of the European indices. I think the price of gold is perhaps the interesting one to watch over the next few days, because we have seen a bit of a move in gold over the last 24 hours. Let's just remind ourselves, big picture for gold, the trend is up. This trend started back in, the latest bit of the trend started back in November 2022 with the market down around 1,600, and it more than doubled into those recent highs, which were only last week. So last Tuesday, we had the fresh all-time highs on gold, within a whisker of 3,500. And you can see, looking on the dailies, it's not been the most exciting market over the last week. So these are the daily candles over the last week on gold. Plod, 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 all a bit side to side. But for me, because the big trend is up, I still be a buyer of gold. The only question is, where does my stop go? So if we had a deeper sell-off in the price of gold, because ideally, if I was basing it off the daily chart, I'd want my stop the other side of, what's that, 29.30, 29.50, which sounds a long way away, but it's only where it was 3 weeks ago, right? So for me, a deeper sell-off in gold is interesting. The big trend is up. That's it. I think what's been interesting the last few days, we've seen this low on gold. It's not been the most exciting market over the last few days, but this sort of 32.60 lows from a week ago have held the market up. You can see I flipped this over to an hourly chart, and you can see how that 32.60 level has held over the last few days. So there's an argument for being a buyer. If we were trading the range, what's the range been over the last week or so? It's at $100 range, $110 range, from 32.60 through to 32.70, that sort of area. So let's see if the 32.60 lows hold this afternoon. So overall, me still bullish on gold. Last week, a little bit boring. I'd rather buy a deeper sell-off in gold if we get it. A bit of dollar strength obviously would help there, help push the price of gold down. But it's quite interesting, down at 32.60, to see if this level holds over, well, let's say for this afternoon. That's why I think it's an interesting market to watch the next couple of days, even though it's been fairly sideways and boring over the last few days. Let's take a look at silver. I don't look at silver much for my own trading. I think it is, it's a bit of an odd market. I think in terms of trends and stuff, we've had this massive trend in gold for however long it's been, a couple of years now, the latest leg of that trend. Silver did move out to a multi-year high here, November last year, but hasn't really done much since then. We saw that high tested again in March. The price falls off a cliff. We saw it rally up last week. I think you were talking about it last week. I'm thinking maybe if you want to go short, that's a time to go short with stops above 35. So nothing too exciting for me in silver. That $35 level is still proving to be a problem. There it is on the hourlies. You can see that $35-ish. When it rallies up to 34, 35, it's been running out of steam. So nothing too exciting for me in silver. I suppose, as ever with markets, there's always a bullish and bearish argument you can come up with. Markets are never black and white. You could take the view, okay, it's been knocked back. We've had these lows around 31.75 have propped up silver over the last couple of weeks or so. Maybe we'll get a bounce back this afternoon. Maybe. But for me, it's not that interesting in the market. I'd much rather at the moment be looking at the likes of gold. So that's where we are with gold and silver. Gold, I think, is the interesting one to see in the short term. Does that level hold, that 32.60 from the last couple of weeks? And does it end up being a springboard for another move back up to those all-time highs? Let's see. Let's see what the next couple of weeks bring. If we have a look at the currencies, it's been a fairly flat dollar index over the last couple of weeks, and we're seeing that, of course, if we have a flat dollar index, then the likes of, we'll have a look at the dollar index in a minute, but the likes of the euro against the dollar, pound against the dollar, they're all a bit flat as well. So this is euro US dollar, and you can see just how tight that range has been over the last week or so. So nothing has changed since we look at this last time round. There we go. There's the hourlies. So the euro is holding above the lows for the last couple of weeks, around 112.50, and nothing has happened since then. Let's have a look. Let's have a look at the dollar index. Let's bring that up. Let's have a quick look at that. US dollar index. Here we go. And you'll see why plenty of these FX markets are a little bit boring at the moment. Here we go. Here's the dollar index. So the dollar against a basket of other currencies. So we had this move back in the 21st of April, so beginning of last week, to a multi-year low for the dollar index. So the dollar moved to its lowest levels since around about March 22. So we had a 3-year low for the dollar index earlier this month. And that's bearish. The trend since whenever it is, Feb this year, has been down. But you could, I suppose, take the view, well, the market broke down, but we didn't really get any follow through. It's not like the market, since it broke through that level, has fallen off a cliff. So I think the contrarian trade for the dollar index would be, one idea is to be a buyer with stops below that most recent low. And that most recent low on the Capital platform is around 97.50. So I think that contrarian trade, if you thought the dollar weakness has been overdone, the market's overshot, that's an idea. One idea is to be a buyer with stops below. I think it's all a bit inconclusive at the moment. It's trading now where it was on the 11th of April, so 3 weeks or so ago. So we've had a bit of chop, a bit of sideways, but nothing too conclusive as far as I'm concerned. So for me, I'm a bit on the fence when it comes to the dollar index. I think if we had a bit of a strong rally back into that trend, if it rallied, I don't know, couple of hundred points from here, it's interesting from a short point of view, but overall not the most exciting few weeks for the dollar index, and that of course gets reflected in the likes of euro, US dollar, pound against the dollar, all of that sort of stuff. So I did see a few people have asked about some other currency pairs in there. We did euro dollar, pretty boring. The trend overall is still up. since Jan or earlier this year, but nothing too exciting. If you look at something like pound against the dollar, GBP, USD, let's have a look at the chart of that. That's going to look not that dissimilar. All right, it's trading around the old highs. So again, so much of this hinges. This is pound against the dollar. The next move, of course, hinges on what the US dollar does. So there we go. The pound has this week traded up to the highs from September 2024. So an idea is, if you thought that the pound was going to fall against the US dollar, this is the perfect level to go short. Those old highs were 134.26. Okay, this week it's traded to 134.43. So if you thought, okay, the pound is going to drop against the dollar, going short off the daily chart with a stop at, 135, above those recent highs, is one trading idea. It's good in terms of risk reward. You are going against, or somebody would be going against, the trend for this year, but we're back up to these highs. So I think it is interesting. But again, until we get some resolution from the US dollar, we're going to continue to see these sort of flip-flop markets not really going anywhere. So, but interesting again. For me, if it broke, let's say it broke 135, that'd be pretty bullish. That would be the highest it's been, pound against the dollar, since Feb 22. So that'd be a 3-year high. But at the moment, the trend is up. So the argument for going long, the trend has been up this year for pound against the dollar, caused by the dollar weakness. The argument for going short, we're knocking our head on these old highs from September last year. So interesting to see how it all gets resolved up here. But not the most exciting couple of weeks, I'd say, in the foreign exchange markets. I think something that has been interesting is oil. I must admit, I've got oil wrong over the last week. I haven't traded it, but I was looking for the bounce. Let's take a look at the oil chart. Let's tidy this up a bit. Let's get rid of that line. So big picture for oil. The price of oil has been sliding for 3 years now, since we had the spike up, or the sharp move higher, on the Russian invasion of Ukraine. US crude traded up to about $126 a barrel. But since then, we've just seen the decline in the oil price. This month it traded as low as 55. So it's more than halved, the oil price, since the Russian invasion. So it was a 4-year low, the price of oil. We've seen the bounce back since then, but that has stalled over the last week. So I think it's an interesting one now. I think, absolutely, big picture for oil over the last few years, that trend is still down. That's the big picture for oil. We had a recovery for oil that was chugging along off those lows, April lows. We did see it recover from 55, 54, 90 up to almost 65. So that's, again, it's a sizable move in a relatively short amount of time. And I was watching this level, wondering if we get the bounce. We did get the bounce a couple of times, but since then, or over the last 24 hours or so, we've seen this market decline. So I don't know. I'd still be leaning to be a buyer. The level I'm watching in US crude, again, this is that tariff pause day. You can see the impact pausing tariffs had on so many markets. The low on that day was around about 54.85, and it traded as high as almost 63. So it had a big impact on the oil price, almost a 10% move in the oil price. The next day it sells off and trades down to 58.50 before bouncing higher. So 58.50, that is the level for me now to keep an eye on. So if I was a buyer now, if I thought the weakness over the last 24 hours in oil had been overdone, then the market's trading 59.75. I'd be thinking about having my stop, if I was a buyer now, the other side of 58.50, that low. So I think that's an interesting one, a bit like gold, for the rest of the week, the rest of today and the rest of the week. Do we see the price of oil, the buyers come back in for oil ahead of these old lows from that post-tariff pause day? So I think that's an interesting one to watch for the rest of this week. Let's see. I would be leaning to be a buyer. I'd happy to be a bit more patient though, just to see if that level does hold. So I think that's one to watch. Now, natural gas, I hate natural gas, so I don't trade it very often because it's a crazy market, natural gas, at the best of times. This year, March of this year, so less than 2 months ago, we had a multi-year high for natural gas, just shy of $5, right? So it hit its best levels since December 22. So we had a 2-year plus high for natural gas at the beginning of March. And the market's turned around since then and traded as low as 3. So the market's dropped almost 40% in the space of about 7 weeks. So it is a bit of a crazy market, volatile market, natural gas. And, if you're trading a volatile market, usually we need to have wider stops to give the market time to move around and all of that. What I think is interesting, though, on the way up for natural gas, let's look at natural gas going into those highs. Our trend looks something like that. But the market, November 24, December 24, end of Jan 25, that whole $2.90 to $3 on natural gas was a level of support. Is it going to be the same again now? Well, that's why I think it's interesting. We have seen it hold towards the end of last week. The price was selling off. It traded as low as $2.99. So there you go, a cent below $3, and the price has turned around. So for me, if I had to do a trade on natural gas at the moment, I'd be a buyer, and I'd put my stop the other side of $2.90. So I think that's an interesting one. On the daily charts, it is an interesting one, but it's a volatile market. Just in the last week or so, it's moved almost 20% in the last sort of 7-8 days. Yeah, so it is, even though it doesn't look that big a move on the chart. If oil moved 20% in a couple of days, that's a big move. So I'm doing the maths wrong there. I apologise for my terrible maths. It's moved about 11-12% in the last few days, from just below 3 to around about 340, 338, where we're trading now. So pretty volatile, but interesting to see if this old level holds again. Okay, and what I'll do now, I'll jump into the ones you're asking about in a sec. We'll have a look at one last market, and we'll have a look at Bitcoin. I think when we looked at this last week, I thought it was interesting. It had broken out of that correction that had been in place since the end of Jan. So when we had the all-time high for Bitcoin up around 109k, something like that, at the end of Jan, and it's just been correcting, broken out since then, and a sharp move. What I'd like to see, do we get a sell-off, a retest near the old lows at 75k, and then the bounce? It's been a fairly inconclusive week, as you can see, stuck in a really tight range. So for me, not too much interest at the moment. I'd rather be a buyer of the dip. Interesting to see if we do get the dip, do the old lows at 75 hold. So I think that's that. I think for me on Bitcoin at the moment. So to recap, before we get into stuff you want looking at, I think stock market indices are interesting. The DAX has been an interesting market for me over the last week because that trend has been up. The Spanish is interesting because we're just below the all-time highs. And then, of course, the US markets, because they have broken out through those older highs from earlier in the month. They haven't had much momentum since then, but we have so far at least seeing the dips getting bought. So looking to this afternoon, you can see they're taking a bit of a hit at the moment. But let's take a look. Here's the Nasdaq. So the Nasdaq, since it started this, has dropped about 80 points. So for me in the Nasdaq, I'd be looking at yesterday's lows first of all, just the other side of 19,300. If we get more weakness from here, do yesterday's lows hold at 19.3? Because that's been the pattern over the last few days. We haven't seen that much volatility, but when the markets have sold off, we have seen the lows from the day before or a couple of days before hold. So let's see. So for me, I'd still be a buyer of a dip on US markets in the short term. Let's see what it looks like. So they're the interesting ones for me at the moment. But let's take a look at some of the stuff you weren't looking at. Sterling yen, GBP, JPY. Hold on a sec. Let's bring that one up. GBP, JPY. I was in this trade from earlier in the year, and then I tightened my stop up because it wasn't going anywhere. But I think it has got a bit of a move on recently. So pound against the Japanese yen. Here we go. Let's look on the dailies. So I bought it back in Jan just to see, because when I was looking at it in Jan, the trend was sort of something like that. So we did have a bit of an uptrend going on like that. And then it all just went a bit boring and sideways and blah, 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 blah. And that's sort of where we are now, isn't it? So I don't know. What would you do? It's been a fairly quiet 4 days. Again, this is the daily chart we're looking at. I suppose if we were going to focus on what's happened in April, what would the trade be based on what's happened so far in April? Well, you'd say, or I would say, the trend has been up since April. So it's gained about 600, 700 points off those lows. So if I was a buyer into that trend of sterling yen, where would I put my stop? I would probably want it the other side of those 24th of April lows, 189.30, the other side of that, if I was going with that trend. So that would probably be my favoured trade, although to be honest, I'd do nothing because it looks a little bit boring to me. You could also argue, because let's not forget, if we're going to be adult about markets, we always need to recognise there's usually an argument for being a buyer or a seller. Yeah, you could argue the trend from up here last summer is still down, so look to sell into any more strength. So I don't know. For me, I'm a bit on the fence about that one, but the hourlies is still up, but it has not been the most exciting of weeks. We did gold. We had a look at that. Someone saying 6,400 to 7,200 in the S&P at the end of the year. Let's have a look at that. So 6,200 to 7,200. So 7,200 is 30% higher than where we are now. That's a punchy call, that is. But 64. Did you say 6,400? So new highs anyway. Yeah, I don't think new all-time highs is that ridiculous on the S&P. It's still, so it'd be 900 points higher than where we are now. So again, that's almost a 20% move, 16% move. Where are we? April. We've still got May, June, July, August, September, October, November, December. So we've got 8 months left. If we did 2% a week, 2% a month, we could be at 6.4 by the end of the year. Let's see. But I think it's interesting. I also think it's interesting that I do think the worst, well, we don't know, do we? But I would say, for me, on the balance of probabilities, we've seen the worst in US markets this year. Unless, of course, and it's a big unless, the government comes out with something else that we're not expecting on top of the tariffs so far. So I do wonder if we've seen the worst. I do think that perhaps we'll get choppiness while everyone just sees what happens with tariffs and everything else and trade deals. So yeah. So, but I don't think it's, historically, with the S&P, always does, over the years, of course, has performed incredibly well. Maybe new all-time highs is a bit of a stretch, but let's see. Who knows? No one's got a crystal ball. But no, fair enough for coming out and saying that. Someone else is saying bears are just letting the market drift up, knowing it's given them a chance to sell at a better price when the time is right. I mean, you absolutely could make the argument, of course. Is the trend still down? We've definitely got, even though it's had a little look through that downtrend line, we've still got lower highs in the S&P. I think, and the Nasdaq, of course. If we were to pick up on the last major high, it's above 5,700. So we're still almost a couple of 100 points below that. So we still have a procession of lower highs and lower lows for the year so far. So interesting, isn't it? As usual, place your bets. Let's see where it goes next. I expect gold to be bearish for the next few months, says David. It will take months to see those levels back again. I mean, I think if the US dollar gets a bit of a move on upwards, absolutely that would pile more pressure on gold. And, gold has had an amazing year. Where did it end last year? Ended last year at 26.20. Traded as high as almost 35.20. So almost 900 points. What's that? It's a 30% plus move in gold for the year to date, up to those all-time highs. That is a massive move. So let's see what happens. But like I say, I'm big trend is still up. I'd rather buy a deeper sell-off. 32.60 is the short-term level for me. What do you think about Alphabet? So Google, Alphabet. Let's have a look at those. Did they have earnings out last week? Wasn't it? Was it last week? Their earnings were out. Let's have a look at those. Let's add it to the chart and have a look. I mean, I traded these a bit last year because the trend was up. And it did see all-time highs last year. Here we go. There we go. So we're I mean, in this bit here is when I last traded it into the summer, and then we had that tech stock sell-off. Well, stocks full stop actually into the summer, didn't we? And the market sold off. But we had up. I would be, the big trend is up, isn't it? So this is Alphabet/Google. So the big trend is up. It has fallen out of that trend line. So do you think the trend is over? That's the bet, isn't it? Do you think the trend in Alphabet/Google is over? I am always inclined to give trends one more chance. But again, it's a perfect example here. You could take the view of be a seller or a buyer. I would say if we're going with the most recent trend since those all-time highs in Feb, we still have lower highs and lower lows. Yeah, so for me, perhaps the more attractive trade from a risk-reward point of view is to go short with stops above those highs. So there's late March highs above 171. And it's the perfect Harry hindsight trade, isn't it? Because that was the move. That was the move on the earnings, the 24th of April, I think. So we saw that move higher on those earnings. And it's been drifting since then. So for me, I'd rather sell a rally at the moment. That would be the trade for me. But I don't think we've seen the last of the trend either. But in the short to medium term, that's probably what I'd rather do, is do that. So I think that's an interesting one to watch, of course. And then there's Netflix. Have a quick look at Netflix, because I think that hit all-time highs just recently, hasn't it? Let's have a look at Netflix, another one of the Magnificent Seven. There we go. Yeah, all-time highs just yesterday. So that's interesting. The trend continues in Netflix. The breakout, they had their earnings out, I think. That's the breakout on earnings, and that has continued. Compare and contrast with Google/Alphabet that had the rally on the earnings, but hasn't continued the momentum. Netflix has, so I'd be a buyer of Netflix. The only question would be, where would my stop go? I think the most aggressive place, based off the daily chart, I'd want to stop, is the other side of that sort of earnings low. Let's call it $1,000. The other side of $1,000. But interesting to see how that trades over the next week or so. And if that's it, we're done. If that's all the questions, then we're done. So lots to watch. We've got the payrolls on Friday. So non-farm payrolls, US unemployment numbers come out on Friday, an hour ahead of the US Open. That'll be interesting. See how that goes. European markets are still, for me at least, positive overall. What's the DAX doing now? It's cooled off a little bit, but overall the trend has been up in these European markets and the US markets as well, but it's not been the most volatile of weeks so far. Interesting to see what happens this afternoon in the US, whether the lows from earlier in the week hold. I would be banking on that so far. And and overall, perhaps get ready for a quiet couple of days until the payrolls are out on Friday, and then maybe we'll see a bit more of an exciting end to the week. But we'll wrap things up there. Thanks for coming along. Please like and all the usual, and subscribe if you haven't subscribed to the channel already. And I'll be back on Wednesday of next week and take a look at markets then. But until then, good luck with your trading.